Hello, Mark Sturdy here with another summary of our work this week on 7 days ahead. And if we look at our summary page, you'll see that we remain bulls of the dollar against the yen. We remain bears of gold in all time frames. We're pulling back for the moment from taking a view in stocks and also taking a clear view in all time frames in bonds. But there are things to talk about that we must talk about. Start with dollar euro quickly. It's been going sideways for quite a long time. It hasn't made a clear break. We understand and recognize the bullishness of the dollar against the euro, which continues. And until these major levels break, we are not taking a strong view about the dollar. The major levels being 1.1213 against the euro. Looking at dollar sterling, it is worth noting that we are at a critical stage whereby the market is pressing up and close to completing a bear rising wedge on a breakdown through 132 or so. Watch that quite carefully. Hasn't happened yet, but keep an eye on it. Dollar yen, we remain bears of the yen. The big triangle driving it up through this big major prior level 147.63. The weekly chart, another triangle inside that weekly chart breaking up and set to drive above 170. This triangle is set to drive it even further than that. And we have the break above the 160.83 level. Short term, it's been dithering, but note the support from the prior highs, which is what you'd expect if it's a good bull market. 160.72, the market came down and bounced off it. Why are we going sideways, rather passive in these stocks? Well, it's this sideways price action. We need a break up through 76.93, or shorter term. Is this a possible continuation triangle? Have we already broken up? I think cautious buyers of the market will want to break up through the prior high 76.89 in the September contract or 76.93 in the continuation chart. Similarly, this has been going sideways but finding support, so it's structurally sound. It's sound on the breakout through 55.24 back in the 1990s, but all this is bullish, and yet short term it's dithering. Wait for a clarity short term, I think, before buying in again. Similarly, the FTSE going sideways since February, actually. The pullback through these prior highs was not impressive in the day chart. So once again, we want the clarity in the short term before we get going in the long term. In short, we want to break above 109.44 or so, it seems to me. The Nikkei, well, relatively bullish as it has been for many moons. The big trend driven by these big charts. Note in the short term the possible bull flag. This is a parallel, two parallel lines here. Break up through this falling diagonal would be a good signal. Wait for that. Wait for clarity in short. Worth looking at the yield-wise, the middle of a range. Price-wise in the TNote, we are testing this lower diagonal, and it could be seen or read as a completion of a rising bear wedge formed around the prior low, in which case the market is short-term bearish and medium-term bearish. Perhaps cautious, anxious bears will wait for another close beneath this diagonal here. Certain lack of clarity there. Watch carefully. That could be a big one because the implications of this triangle is a move very much lower in price terms. This is about 8 big figures. 8 big figures takes you down to 101. Impressive move. Watch that carefully. The German Bund too is dithering here, but this is an impressive bounce off prior highs. These are weekly closes. This is very impressive structurally, I think. There's no immediate short-term clarity about how far this is going to go down. You'd want to see a break beneath 124.45 and this low here. It hasn't happened yet, so the price action isn't that clear, but the yield chart is very impressive, very underpinned in the bonds for higher yields. Gilt, well, we remain bearish long-term in the gilts. There has been a pullback to this band of support. There is, rather like the US, the completion of a bear rising wedge. lack of clarity in yield terms. Price-wise, it's under pressure. So there is a combination, maybe not hard and fast in terms of short, medium, and long, all pushing in the same direction. But the evidence is gathering that there's bearishness along the way, in line with this long-term chart, in line with the long and medium-term chart in the US. Watch carefully for more price action, more evidence of bearishness price-wise, bullishness yield-wise. Oil, well, it's bounced off the support where we thought it would, this 71.69 level. Not clear what to do. We're neutral. Gold, we remain bearish because of this pattern here. We think it could go a lot lower. Thanks very much.